As the cannons of the world are crying, the markets are setting new records. Nasdaq up 5.73% last week after the Trump victory, and even Dow Jones up 4.6%. And many of you are probably in crypto. I advise you to get into crypto a long time ago, because Bitcoin is setting new records, currently sitting above $81,000. You are listening to the StockInvest.us podcast, Trading Tips with Jim, the one podcast where the woke mindset never got a grip. While you are celebrating, or at least the markets are celebrating the Trump victory, I will tell you a little bit why you shouldn't be too happy yet, because there is a road ahead of us, and I believe markets will have to account for several things. Of course, I will get to the $1,000 challenge, and I will tell you a little bit about the main events of the week. First off, congratulations to US and the US election, and if you were a Trump voter, congratulations to you, and if you voted for Kamala, well, there will be another chance in 4 years. The markets for sure was celebrating the Trump victory. I told you this last week. If Trump wins, you can just expect a very nice green end to the week. We saw it in the pre-markets, we saw it in the run-up for the US election, how closely the market was correlated with Trump's movements in the polls. And despite CNN and all the woke media was saying that this will be the closest race in a century, well, it was far from. It was a landslide. Enough about that. We are here to talk about how this will affect the future, where should the money be put, and how shall we deal with things moving forward, and possibly see if there is a trading tips or two. Last week I told you the following. I gave you a scenario: what will happen if Trump win, what will happen if Kamala win, and I said I wouldn't elaborate too much about it. This time I will elaborate a little bit more. Some of my statement was like, if Trump win, you can expect oil to start falling, you can expect gold to start falling. And gold, which was almost at 2,800, didn't have a good week last week, fell almost 3% to $2,678. And I personally, who is heavily invested into gold, I bought gold as soon as I saw Biden winning the election. I started to get into gold because it was obvious where the world would go, where the economies would go, what would happen, and gold was one of the choices I did for diversify into different items. And if you go just some years back in the podcast, you will hear me say this over and over again. I have been pushing the narrative of gold hitting $3,500, but like I said last week, now we have to do a revision of this. Personally, I have to think, should I get off some of the gold, because a huge part of my savings are sitting in gold, and I've been doing phenomenal in that investment. Should I now start to reduce, because I see a short-term possibility that gold would go down to 2,200 before it again goes up. And let's just develop a few minutes about this topic, because it's a very, very interesting one. First off, the reason gold is high is because of all the global tension, and as Trump got elected, we already saw instant results across the world in terms of peace suggestions coming up, which is a good thing. Of course, I wish peace on everyone, peace and happiness. And the first step towards happiness is at least get away from wars. For sure, wars very seldom solve anything. So now we slightly see that edge coming, which is an edge that argue for a less gold price. At the same time, there are a few other things brewing up in the background. I told you inflation will not go away anytime soon, and this week I believe it will be on first numbers will be on Tuesday, I guess, from New York. We will see some inflation data from New York. On Wednesday we will have the core CPI numbers coming out, expected to actually increase a little bit to 3.3% 12 months over 12 months after a gain of 0.3% over the month. I would not be surprised if the inflation numbers will come up even a little bit above. I will be very surprised if they come below. It will be a nice thing, of course, but I think they might come a little bit above. The other thing is, which I think that you also should take into consideration, as we are getting to the end of the Biden-Harris administration. I believe we will start to see very, very different numbers coming up. The numbers will weaken very, very fastly after January for sure. Of that I'm very, very certain. We'll see now if they slightly start to make that transition, get back to the real numbers. But I don't believe inflation will go away. I have argued why. And even with Trump coming in, I cannot see inflation go away yet. I think personally we know that Trump love low energy cost. I think that is the first thing that we will see. Oil, for instance, will go down. So personally, I am getting slightly out of my oil shares. I will stay in some of them because of the huge dividends they pay, but overall I will reduce my oil exposure. I will go, and I have been doing that actually for some time, go a little bit more into the carrying sector of oil, because I now see more energy float across the ocean. So I invested into several Norwegian companies, for instance, which pay insane good dividend, and I believe the rates will hold up despite oil probably will fall. I believe that the transport rates will keep somewhat good up, and that the upside will be in the dividends, and the stocks will hold good. Energy is the key thing for key thing for keeping inflation down. But there is a delay in everything, and one of the things that has been very, very obvious for anyone who follows is that the quarter earning results are falling. The margin has been under constant press, and they just keep falling. And I read an article this morning before the podcast saying that the real investors, the big investors, they will be very reluctant until they start to see a huge change where the earnings are actually starting to grow again. Yes, some companies are able to push their earning upwards, but most companies have been on the losing edge. Inflation takes a toll. You can only take a certain offset of the end price to the consumer. That is why I asked you to keep an eye on all these consumer-related stocks, because they would give a telltale of the consumer behavior and the change in consumer behavior. I think these things will just continue as we move forward. We will celebrate now for a little while. We'll celebrate the US election, and there will be hope, but reality will kick in. They are all increasing the prices. We had the shrinkflation, we had inflation, we had the shrinkflation, and the prices are increasing. Disney, for instance, will be one of the quarter results coming in this week, and we know that they hiked their prices. They will continue to hike their prices. Netflix did the same. We see it across the board. These things will account for higher inflation together with a lot of other things. Some of you might think, well, the super tariffs that Trump is going to impose will do the huge inflation run. It will not. These things will come from behind, be trends that have been established. All the wage cost, all the increases in the wages, all the shift from private to governmental, all of these things cost. It gets inefficient. The cost has to be offset somewhere. It's being offset on you, the end consumer. So I only can see inflation going up. I'm very, very uncertain where it will be. My prediction a long time was that we will go into stagflation, and I still believe it despite Trump winning. I think that the first 2 years of his presidency will be fighting off all the things that are causing economies now to get to a very, very bad ending. Hopefully I'm very wrong, because the numbers been very, very good across all the board, most of them. But as I said, delinquents in credit card payments are at the highest they've ever been. There is a lot of things speaking for a little bit different truth, and I think we'll see in more of the numbers coming forward. In this scenario where we possibly hit a stagflation, I think gold actually might do very, very good. The question is, where will all of this happen? Will we have gold down to 2,200 before it increases? But for sure, that very rapid gold for 3,500 for the gold is not within sight yet. I don't think that you should expect that to happen. The risk is now not, the risk reward is not now the best, but maybe we'll see. I think gold short term will continue a little bit downwards. As numbers starts to come in, the more real numbers come in, I think gold again will push upwards, and we might actually at some point hit $3,500. More about that. So oil, I believe, will go down. Energy prices in general, there might be now these last few months before transition, there might still be holding up somewhat good oil prices, because we know all the crisis ongoing in the world. So that might still be, but sometime into Trump presidency, I think energy prices will start to go drastically down. That will improve every inflation-related measurement, but the real effect of it we will only see in a few years. So gold, oil, personally, as I said, going down a little in the oil, going more into transport of oil, gas, etc. Gold, I will just have to make a decision what I will do, but I don't see the currently I don't see that major run that we had. I think that part is over. The next run will come as, if I'm right, we will see increased inflation. Then I think that gold will continue even more. On the upside, crypto will continue to run. I think there is a fair chance Bitcoin easily will take 100,000. It might even go to 200,000. These things are very hard to say, because crypto been kept in a lid for a long time. There's been an upward pressure in crypto. It's been pushing up, plus $70,000, then going down, then going up, then going down. This is just like everything in technical analysis, moving in a rectangle formation. When it finally bursts, it should go very fast. So we should at least say from 75 to 100 is like technically a very, very reliable and high chance probability for it to happen. How long it will run remains to see. The only reason why it runs now is because Trump said he is bullish to crypto and believe that the future will be more about crypto. Happy for me, I invested, and I told you, just rewind these podcasts, because I cannot say, because I've been doing something called averaging. I've been buying every time crypto was low. I've been buying, and now I'm celebrating every day. I'm waking up to so good numbers. It's actually the best thing in the morning is having a coffee, checking my crypto account, because it's been on the absolutely good side. Will I sell? Well, I will see how things play out. I might reduce a little bit, just take some profit, move that profit over to other different investments. 13 minutes talking way too much. Let's speed up a little bit. What is happening this week? Well, today on the Monday.com will have the quarter results. Then followed by Hertz, Home Depot, Occidental Petroleum, Plug Power, Shopify and Spotify will come tomorrow. Wednesday will be Cisco, and Thursday will be Advanced Auto Part, Applied Materials. Disney will come. Vogue Disney, we will see if they are able to turn around the ship, and JD.com will come. Friday will be Alibaba. You might have some of these companies in your portfolio. You might be thinking of maybe buying some of these companies. One thing you always should check is what is the expected swing on the quarter results. How much are they supposed to move up and down on the day where the quarter results are released. And here are just some numbers. For Monday, the expected swing, meaning that the movement in Monday after releasing quarter results is expected to be upwards to plus minus 10%. For Home Depot, it's not so much, it's 3.6%, but still I urge you, or advise you at least, to read what is said about the Home Depot number, because it's something about the consumer behavior and will give a more telltale about the economy. It's an interesting thing. We will see how the shifts are. Shopify, 8.7% expected movements plus minus on the quarter results, meaning it can fall 8.7% or go up 8%. These numbers are not very, very accurate, like it's not 100% accurate, but still they hold, I would say, a decent, fair amount of reliability that we saw that last week. I don't remember which company it was, but they had the quarter results, I think even I said in the podcast, and the actual move, well, it was Palantir, and the actual move was more, but it was, what was it? I said it's expected to move 14% or something, and the move was more than 20%. Spotify expected to move 7% plus minus on the results. Oxy 3.96, not so much for Oxy. Disney only 2.55% move expected for Disney. Alibaba 5.55%. How can you use this number? Well, if you are able to predict if the results will be good or bad, how the market will interpret it, well, you stand to gain a lot. So it might be places where to put some options, etc. Hoping that you, of course, get the right direction. Where do you find these numbers? You find them on stockinvest.us when you go to your tickers. And if you go to my test site, getagraph.com, where I develop all the new tools, you will find it in the earnings report under tools. You will find the table, and you can just find your company and see how much is expected to move based on the quarter results. These movements can be permanent, meaning that the stock go up and stay up, or it will just be a one-day swing. Anyway, very good tools. The numbers that is to be watched is some inflation numbers on Tuesday, as I said. Then it will be CPI on Wednesday. Very, very interesting numbers there. On Thursday will be import prices, export prices, and the jobless claims, which is expected to come in at 225,000 people. Not sure for these last 2 months we will start to see some big changes. I think that we will slightly see an increase of the numbers, as I believe now we will see. But for sure, in next presidency, just be expected to see numbers go sky high. And the reason will not be what you think, and they will just be aligned. And you have to know a little bit about politics, etc., reporting, and how all things are gathered together. And it shouldn't be any surprise. Where should money be invested? Well, as I said, I'm not sure that oil should be. U.S. under Biden has emptied their strategic reserve. Trump will be filling it up once the price is good enough. First, he will try to dump the price, then he will try to refill the strategic reserves. But still, I believe oil may not be the place that you should be in. Gold-related stocks, I would also say maybe not. Tech industry is celebrating. We know that many of the big tech companies have celebrated the Trump victory and congratulated them. Of course, they will do after some of these companies having censored, especially during 2016 election, they censored Trump, and even during this election, we know for a fact, Google, YouTube, some of these companies, Meta and Zuckerberg probably saw where things were heading, because Zuckerberg before this election said he was sorry about all the censoring in the last election. So he changed his mind, and Amazon, Jeff Bezos also changed his mind. And in general, things are, despite many of these companies have been opposing free speech, working against free speech and free democratic processes, all of them are expected to thrive under Trump administration. There probably will be some scrutiny around different things. Things will come to the light. But in general, tech industry is expected to do fairly good moving forward, meaning probably less. They will try to deregulate some of all the regulations that have been applied over the last few years, and also working on improving the groundwork for expansion globally and all other things. So tech sector is again looking very interesting. More interesting than tech sector is actual industries. I believe that we will see a renewal in core industries, and that maybe these are also been very, very much hammered over the last few years. I think there will be a huge upside if you're able to find good industry stocks, because as we know, Trump is all about making America great again, meaning that he wants homeland production, not everything to be imported or produced in China, etc. We already saw it was some shoe chain or something like this that already said, okay, we will start to produce more shoes in United States because Trump is putting on tolls. So we already know that is working. I think some of these companies will actually be on the winning end over the next 4 years. What about war industry, where we made so much money? Well, I don't think there is much upside in the war stocks in stock prices anymore. But I think they will be absolutely the top dividend payers over the next maybe 2-3 years. Because there are so much orders, they will be very steady, and even if markets take a fall, I believe that war stocks will hold quite good up in general, meaning that they will not lose so much. And as I said last week, combined with dividends, it would make for a good investment in my opinion. I believe it is time to round it up. You may wonder, so what about all the signals? How are they looking? Last week you told that the signals were very low, that it was possible to get up, that they could go further down, but if we get a Trump win, there will be green markets. Well, buy signals are increasing across the boards, across those that we analyze. For instance, across all the stocks, it was 27% buy signals. They increased to 34, meaning across all the world. 47,000 tickers are measured in this number. Nasdaq, of course, up from 14 last week to 18. And given that given that it was somewhat low, now is going up, is just indicating that Nasdaq-related stocks should, in my opinion, have a good week moving forward, may even have a good week all the way till January, and maybe even a little longer. New York Stock Exchange also up 26 to 41%, but that means that these are starting to get on the higher end, so I don't expect too much from these companies. I believe smaller tech companies will thrive better over the next few weeks, along with other stocks. London 22 last week, 22 this week, unchanged. Frankfurt up, actually down from 37 to 30, while Tokyo up from 17 to 29, and Shenzhen, China up to incredibly 75%. There is expected more stimulus in China. That is why Chinese stocks, and maybe if you follow this podcast, you know that I went into Asian stocks some months ago, saying that I think there will happen big things in China stocks, especially for China. So I went into China and have been celebrating ever since. Was a good call. Getting to the end, no, not by far, not yet, but it's time to rake some of the profits there. National Stock Exchange of India up from 19 to 22%. The sum of all of these things doesn't say that the market is overbought. By far, there is more upside to come. Given everything, I think there is a fair chance that we will have a green week this week in the markets. And for many of you, because I know many of you, you are in all of these small penny stocks and all the things that you shouldn't have been in when you should have been in the Magnificent 7 stocks. You are because you're hoping for everything. I believe many of you will have a very good week, maybe next few weeks moving forward. Because I think some of these, now we will start to see more pickup of these stocks. Now they are pushed to major stocks. Again, we will see pickup of all of these stocks coming up. There was one person mentioning, maybe on YouTube, maybe on Discord, I don't remember. What about Sumerica? Well, I am in Sumerica. It's been not a good investment so far, but rewind back all the time. You heard me say that it will take a long time before it starts to move, and when it will move very, very fast. Sumerica is working with pets, medical equipment for pets, scannings, etc., reporting for pets, which is a huge market by itself. They still have around $170 million, I think, in the bank. Having quarter results very, very soon, I believe. Hopefully that will be one of the triggers starting to push. Currently sitting at only 12 cents. What a disappointment that is. But market have not cared about Sumerica at all, despite numbers getting better every single quarter. Is this the time the Sumerica will come? Well, I hope so, because I am invested into Sumerica, currently sitting with, I would say, a bad loss. But these stocks, they change very fast. I'm not worried at all. It's one of the stocks in my maybe portfolio. We will see, will I be right about that $1,000 challenge? So what about NIO? Tesla, as you might know, went sky high, and when discussing the last investment, I told you Tesla or NIO, and I went for NIO. NIO was a Kamala stock, absolutely, while Tesla was, of course, a Trump stock. Trump winning meant Tesla moving insanely fast up, while NIO actually had a fall. Currently sitting at 509, in the portfolio at 510, meaning that there is a slight loss of 0.20% on the investment into NIO, but I still will stay in NIO, and I believe that we will see a movement as stocks. Now we had that first run on the initial stocks, and I think people will argue, and I see more and more experts saying the same thing, that NIO at current levels, which again delivered very, very strong car deliveries, record deliveries, is underpriced at the current value. But it seems like we will just have to be waiting, and such a disappointment when the market was up more than 5.72%. NIO did absolutely nothing in the $1,000 challenge, sitting at $2,917 when it should have been so much more. Had we been in Tesla, we would have celebrated $4,000 by now, and not sitting under 3 still. You may be disappointed that it's not moving. I'm disappointed too, but this is stock market and this is stock trading. Anyway, time to say goodbye. I hope that you will have an exceptionally good week in the stock markets and the crypto, wherever you are. And I hope that when we see you next week, that your portfolio will be much greener than it was by the start of the week. Until then, just have a super duper week. Bye.
Welcome to StockInvest.us Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.